guys, thanks for clicking on my market report here. This is Mike Bjork, and we'll go over most notably the bond market or what's affecting mortgage rates today. But we do touch a little bit on the stock market as they do kind of compete for dollars here, so they kind of correlate with one another. Let's start off with the economic calendar for today. We do have quite a few here. As you can see here, retail sales for the month of January. In December, it was actually initially came down 0.7%. However, it was even revised lower, down 1%. Now, forecasters calling for 1.1% increase month of January, but it came in much hotter at 5.3%. So very good numbers in retail sales there. Now, we also got inflation data for on the wholesale side of things. That's what the PPI or Producer Price Index here indicates. So in December, we had a 0.3% increase. It was supposed to have a slight increase for January at 0.4. It came in much hotter at 1.3%. So a pretty big jump right there. Now we're going to look at more of the important data here. When you take out the food and energy from that data, we get the core PPI. So the year over year jump from 1.2% in December. Forecast was supposed to be down slightly at 1.1% and actually jump upwards to 2%. Now it's month over month from 1.1% increase month of December. Forecast come for 0.2% and it jumped up 1.2%. So now you can see why the year over year jump had a big spike from 1.2 to 2% because it's month over month jumped 1.2%. So a big spike there. Now this a lot could be a pretty big spike in our pent-up demand on the wholesale. So we'll have to kind of watch this over a course of time, over the next few months, because again, as we saw increases of COVID cases, we could have saw some pent-up demand developing in the month of December going into January. So again, we'll wait and see if this really heats up, and if not, then if it subsides a little bit, that'll help us out a little bit. Let's kind of continue. We'll look at the industrial production for the month of January. So December was up 1.6%. However, that was revised a little bit lower, down to 1.3%. Now, forecast was calling for a 0.5% increase in January, but it exceeded that to 0.9%. So, okay, pretty decent numbers there, better than expected. However, of course, we saw that lower revision for the month of December. Now, we got confidence level here. This is an NHB housing market or home builders index. This is that gauges the confidence level for the home builders. Now, as you can see, we had 83 back in January. Forecasters remain unchanged. However, it had a slight uptick in the month of February. So it had a slightly better feel or a better improvement for the confidence level. Last but not least, we got the business inventories for the month of December. So November, it jumped up 0.5%. Forecast calling for basically the same equivalent to 0.5%, and it increased 0.6%. So a little bit hotter than we expected as well. Now, something a note we can take a look here as well. We have the mortgage application that we get every Wednesday. I don't really touch on these because it's not real important, but as you can see here, purchase and refinances both dipped down. As rates been creeping up a bit, we saw both loan applications drop last week. Let's take a look here at the headline news. Stocks are down. We had some pretty strong data there. However, if you look at the inflation data, as we talked about, that's creating a big spike in yields. We'll touch on that in a little bit here, but the spike in yields is what's basically on investors' minds. They want to watch and see because obviously that will have an influence on valuations of stocks and everything else. So let's without further ado, let's jump ahead and see what mortgage-backed securities doing, what mortgage rates doing. We had a huge sell-off yesterday. Now, basic investors are saying that was a little too much and too fast, so they're pulling back. But we even, as you saw here, we did test it even further downwards. And since then, we've kind of pulled up. So when the opening bell came up, we've kind of gone upwards. We're up about 13 basis points. So we're up slightly, a little improvement from where we closed up yesterday. A lot of lenders had to price in, one or two times price reductions because we ended up closing down like 70 basis points. So it was a pretty big drop right there. So we're having a slight improvement. But if you go from yesterday morning, yes, we are definitely well off from yesterday's morning. But from the close, we are up a little. We have a little bit of improvement from where we left off. Here's the yields. As you can see here, we're down. It's testing us now, which was our ceiling. Now it's our floor Now we're testing this. We're down to about 1.277, so just under 1.28. We did test the 1.3 range and pull back and subside a little bit. So now we're breaking into a new range here, and this could be pose more trouble for mortgage rates in the long term, or even short term for that matter, as they've kind of spiked in recent days here. All right, so again, we'll see rates continue rising. However, we will see peaks and valleys. We'll see kind of going up and down a little bit. It won't be like a straight line. So just keep that in mind. We'll try to time it as we can, but sometimes with the whole COVID thing, we have a lot of unpredictable factors that can come into play here. If you guys got any questions regards to mortgage rates or anything else of that nature, whether it's refinances or purchases, a little bit about myself. I am a loan officer and I do work with a national company. I would be more than happy to help out any way I can. So please feel free to reach out anytime and see what we can do for you guys. You guys have a great rest of your day. We'll see you tomorrow's video. Thanks for watching. Bye-bye.